All right, let's start reacting to videos here. Tom Lee up first. Tom Lee.
A new note to investors, Fundstrat head of research Tom Lee saying, we want to apologize as the terms of the Tariff Liberation Day were far worse than we expected. Tom Lee is a CNBC contributor, and he joins us now. But Tom, when you try and do direction and duration in the same way, we always go, I don't know how you expect to do that. So in this point, at this time, you didn't really anticipate that formula, I think, that was going to be used to arrive at such high tariffs. Kind of maybe got blindsided by that to some extent. But with that in mind, you still think we're starting to see signs of a Trump put as of yesterday. Maybe the NASDAQ closing higher is an indicator.
Anyone ever had a masala chai iced? That's what I have. Masala.
Yes, that's right. Markets are stretched to the downside because we lost, almost 13 percentage points in 2 trading days. As you know, it's almost like the stock market and the economy was delivered a heart attack from the terms of those tariffs. So I think that there is a bounce underway. Mark Newton, our head of technical strategy, views this as a technical rally. I think something that can take us, to recover towards 5,500 or something like that. But I do think that there is the challenge is going to be, we don't have a fundamental clarity and sort of the all clear enough for us to say that that's going to push us back towards new highs. So I do think we're kind of stuck in the near term, but yeah, I think markets overreacted to the downside. And yesterday, it does look like the messaging has switched. The president has moved towards to letting people know they're negotiating. And I think that's a return or a quiet return of the Trump put, because I don't think they want markets to continue to have this heart attack.
So you many times talk about your technical analysts, and a lot of times it doesn't involve trying to gauge what's going to happen with fundamentals or certainly not policies. But in this case, you got blindsided a little bit by something totally unexpected in your view for the size of the tariffs or the level of the tariffs. Why do you feel confident that we're in negotiation phase now, and tomorrow we might be back out of negotiation phase? You could get blindsided again. I mean, then that would throw off your 5,500 target, wouldn't it?
Joe, that's right. One of the things, we spent a lot of time talking to investors between Wednesday, Liberation Day, and over the weekend. And, it's clear to us investors feel that not only were these tariff levels absurd in the sense that it was very difficult for people to understand the calculation, but it really did break a covenant with capitalism. The idea that businesses need stable and predictable regulations. Many companies moved their supply chains in 2018 because of the need to move away from China. And now they have, potentially trillions of dollars of stranded capital again because of these tariffs. So I think that that's the seismic shock that's very tough for markets and the trust that's been broken. It doesn't mean that we can't see a level of clarity that helps restore that trust. And so markets, after this waterfall decline, one scenario is a V-shaped bounce that takes us back to the previous levels. But the reality is it's going to, I don't know what that sort of clarity that's required for that is. So I think it does feel like this will take some time. And one very good friend of mine is Tom DeMark, and he says this reminds him of 2011. I think that that's not a bad way to look at it, that it's going to take a little time for markets to regain some trust.
So this is hilarious because if you watch there was a video I did probably maybe 2 months ago, and it was either here on the reaction channel or on the main channel. I think it was here on the reaction channel because I react to a lot of Tom Lee clips and whatnot. And it was around 2 months ago, and oh my gosh, they were just loving Tom Lee. They were like patting him on the back. The comments so loving Tom Lee, right? And I told you guys, just wait. As soon as the market turns the other way, people are going to be dogging on Tom Lee. They're going to be hating on him. They're going to be talking trash about him, saying this and saying that. And sure enough, exactly what we're seeing now at this point in time. People are dogging on him, making fun of him, all those sorts of things. It's just in a matter of 2 months. right? And so every time we're in a bull market, people treat Tom Lee like a legend, like, oh my gosh, he's everybody's favorite bull. And as soon as the market flips the other way, he's one of the most vilified people in the market, to be quite frank. And people make fun of him because I witnessed this before. 2021, people loved Tom Lee. They loved Tom Lee then. 2022, oh my gosh, people had no respect for Tom Lee. They made fun of him. They said he lost all credibility, all those sorts of things, right? Then 2023 comes along and people start somewhat liking Tom Lee. They start kind of becoming a little indifferent. By 2024, especially late 2024, they're in love with him. A couple months ago, it's a blow off top. And then all of a sudden now, the flip happens, right? And all of a sudden people are doubting his credibility, and he doesn't know what he's talking about. He doesn't know what he's doing, right? It cracks me up in regards to Tom Lee. He just can be so loved in a bull market and so hated in a bear market.
But we did see, Tom, that huge roar back yesterday on the false rumor that suggested that
doubts, I think we're in serious trouble.
They were going to pause, the administration would pause for 90 days while doing this. So the market may have broken trust, but it's very eager and really hoping, it sounds like, for some relief to come from this.
Yeah, I think so. I think that there maybe were some, that's almost, if that was a trial balloon, it worked. It showed that if there was conciliatory actions that were sort of friendly to businesses, that the market could have a massive, massive move. The idea of like an exporter tax credit, these things really can restore confidence, because at the end of the day, the entity caught in the middle of this has been companies, and the capital that they've invested, they need to earn a return. That hurts shareholders, but it also hurts all the employees that work at these businesses. So I do think,
this really bothers me a little bit. These people, this whole notion about Trump has destroyed the markets due to his ego. I should have never voted for this guy. The people that are turning on Trump that voted for Trump is cracking me up. I was actually talking to my wife earlier. I said, if you voted for Trump, you should not be, if you're in your feelings about him, you were not listening to anything he said on the campaign trail, and you didn't pay attention to anything in the first term as well. If you know Trump, what were the main things he campaigned against? The same thing he's been saying for decades. Countries are ripping us off. We need to make massive changes here, right? Do you think that just comes along with the little teeny tariff here? No, he's going to make drastic changes. This is what he campaigned on. He's doing exactly what he said he was going to do, right? And so, like, if Trump all of a sudden was bowing down to Ukraine and was like, oh, I love Ukraine, we're going to send them hundreds of billions of dollars and do whatever, and he's like, it's okay, you can come over and be an illegal in America, and we're not going to kick the illegals out, that's fine, and you know what, we're not going to do the tariffs, then I could understand if you voted for Trump, you turning on him, because he's not doing any of the things he said he was going to do. The stuff he's doing is what he said he was going to do. Just because the market's going down now you're in your feelings, you didn't listen. You didn't pay attention. And I know some of these people in real life that voted for Trump, and now they're all mad at Trump. And I'm like, dude, did you not pay attention to anything that he said he was going to do? Like, I'm just like, come on, man, come on. Now you're going to turn on him? Like it'd be like voting for Bernie Sanders, and then being in your feelings because Bernie Sanders goes up on taxes, and you're like, oh, Bernie Sanders went up on taxes way too dramatically. It's like, did you not listen to Bernie Sanders and what he said he was going to do? And, the whole notions and everything, like, were you not paying attention? Come on, man. Like, it's ridiculous.
The ripple effects, looking back, it does make sense why the market had a heart attack. But of course, this also means parts of this is very fixable, but it does mean that there's, a bit of time involved.
I don't think the administration really planned that trial balloon the way that it kind of worked, but there's no doubt that they were paying attention. I would think it's like, wow, look what can happen in 5 minutes. You go from down 800. Let me just ask one other thing, Tom. So we negotiate with the 70 countries and we asked Scott Dustin about it. What if China becomes, it's called a trade war, and the language we're hearing on both sides, it actually sounds like it could be headed for a war. So if we're, if the Trump put involves the idea that we're negotiating with a lot of places and things just get worse with China, would that change your calculus on the Trump put? Well,
7 countries represent about 70% of that trade deficit. outside of China, I think the EU and Japan, Korea, Vietnam, Canada, Mexico, I think we're heading, it looks like we're heading towards something that's acceptable to both sides. And really that leaves the U.S. in a better position. I think there's a possibility that we don't ever resolve this with China. So, there's going to be an attempt to maybe build the supply chain or isolate China. I think that's acceptable for markets as long as that's actually what's.
So we don't need
So I want to show you guys something very important here. So what I'm showing you is since the big day, Liberation Day, babe, April 2nd, I want to show you Apple versus Meta versus Amazon versus Google stock. What's very important about this is look at Apple. Devastated since Liberation Day, right? I mean, it's been nothing but liquidation day. I mean, the stock's down about 22% since Liberation Day, right? Why is it doing so horrible compared to Meta and Amazon, let's say, for instance? Well, Meta and Amazon have little to no business in China. Little to no business. So those stocks are not nearly as affected. Obviously, the market's gone down significantly since Liberation Day, so all stocks are going to go down. It's just Apple's gone down way more dramatically because Apple has so much production in China. Additionally, it's usually one of their best markets, right? You kind of look at Apple's business and you say, okay, the US is the main dog, then comes Europe, then comes China, right? And if we're talking about their Chinese business is going to tank over the next few years, whew, that's very negative. And then you look at Google and you say, my gosh, how is Google only down 7% roughly compared to Apple 22%? Well, gotta understand. If the Chinese are going to revolt and say, we don't want iPhones, right? Which, by the way, if I lived in China, I probably wouldn't buy an iPhone either because at the end of the day, there's a lot better options out there for you for phones than an iPhone. But the moral of the story is, what is the other option? Android. Who owns Android? Google. And then Google doesn't, I mean, their YouTube's blocked in China, right? Google search is blocked in China. So Google doesn't really have any negative way their business can be affected by what's going on there, but they can be very positively affected if the Chinese say, screw Apple, we don't want anything to do with Apple, but we'll gladly buy Android, which is the only other option. If you're going to go buy a Xiaomi or a Samsung or whatever, they all run Android, which benefits Google. So now you can see why Google stock has performed tremendously better since Liberation Day, and it's not even close versus a stock like Apple, right? And that's also why Meta and Amazon have performed better. So if you're talking about who's benefits the most since Liberation Day, it's definitely Google out of that bunch of stocks, right? So, honestly, if the market wasn't down so dramatically, Google stock would actually be up right now significantly since Liberation Day. It's just when the market's getting brutalized the way it's been brutalized, right? So check out the Qs. The Qs is down 12% since Liberation Day. So yeah, I mean, if the Qs are going down 12%, it's almost impossible to have your stock go up if you're in the Qs, right? And so, but Google's done far better. It's only down 7%. Negative 7% versus negative 12%, you'll take that any day of the week, right? So that's what's going on there, and Apple's in a tough position, man. And how they get out of this, I don't know. We'll see. They'll make it through, certainly. Apple will be fine long term, likely, but it's going to be a mess for Apple to deal with for a while. And then if we're talking about, oh my gosh, all these tariffs and what that's going to do for iPhone pricing, which is going to price even more people out of the market, which then gives Android a more competitive advantage because Android is a much more competitive market because you have so many different suppliers selling Android phones that they can't really price the way Apple prices their products. And so, once again, that makes Android more compelling, which benefits who? Benefits Google.
Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you're looking at in front of you right there, that's 1000xstocks.com. That is my personal advanced software that I use to make my investment decisions when I go to invest in companies. As somebody that's been in the market 15 years, I got sick and tired of using these different services that folks have out there that are designed for traders in the market. People that are looking to get in and out of stocks. That's not what I'm here to do. I'm here to long-term invest. I need to be able to see all the different ratios and metrics that are very important for me as a long-term investor to judge if I'm getting a great deal on a stock or if I'm getting ripped off on a stock. I need to be able to compare different companies versus each other and be able to do that in a matter of seconds rather than it taking hours like it used to before I created this service. I want the ability to listen to conference calls, see SEC filings all in one service. That is what we've created with 1000xstocks.com. If you are looking to access this software, go down to the description area of this video. You can click the link down there and apply for access. If you don't want to do that and you want to search a website, go to 1000xstocks.com. Enjoy it.
You ready to get in some absolute madness? Oh, baby, do I have something to show you. Check this out. Look at RH stock here today. It fell over 40 percentage points. I mean, on a day of Red Dead Redemption everywhere, there's always got to be one stock that just takes the cake and eats it too. And that was RH here today. 40% drop for that stock. Look at Stanley Black & Decker, down 16%. 16% is a crazy move in a day for a stock like Stanley Black & Decker, right? It's just next to a 40% move. It looks like, oh, it wasn't that bad. But no, that's a disaster. Caterpillar, one of the biggest companies in one of the prides of the USA, was down 8.6% here today. United Rentals down 8.5%. You see stocks like that moving down, that's basically calling recession, right? Toll Brothers down about 8%. And you might say, Toll Brothers, they build homes in the United States of America, right? What's a big deal? Well, two factors in regards to somebody like a Toll Brothers. You have recession fears now amped way up. Just before I started this video, I just heard Goldman Sachs took their recession odds for this year up to 60%, I believe. So recession fears doesn't mean good thing for Toll Brothers. Additionally, I have actually three parts in regards to somebody like a Toll Brothers. Toll Brothers sells to who? They sell to a lot of wealthier folks. The average selling price for a Toll Brothers home is around $1 million, right? This is not a home builder for everybody. Listen, all the people that have money are all scared as crap right now. They're seeing their portfolios go down. They're hearing about Trump this, Trump that. They don't know what it means for their business. If they got a good job at a company, they don't know if they're next to be on the chopping block. They don't know what's going on with that. And lastly, you got to understand, there's a lot of things that go into a new home being built that come from other countries. And so although the home's being built in the United States, it doesn't mean everything inside that home's coming from the United States. Some of it's coming from Mexico. Some of it's coming from Canada. Some of it's coming from China. Like, that's very, very important in this whole situation. And so what does that mean? Price of homes, if you're talking about being built, it has to go up, which... Whew, it's already been tough enough for these home builders to sell homes recently. Never mind you tack on all that. It gets even more brutal. Look at crude oil. That's going to tell you a lot, right? Look at crude down over 7% here today. Now, listen, what is that telling you? That is telling you it feels recessionary, right? That's telling you the market feels like recession. Now, also, I did hear that OPEC, I believe, is going to increase production as well. So that could be a part of it. But come on, a 7% move on a crude oil that's already weak. And here we are now in springtime. Usually look at springtime going into summer as kind of a bullish time for crude. If we can't get crude up in this sort of time period, when can you get crude up, right? Now, there is, I think, a big positive. I do have to mention to everybody out there that's looking at that crude oil price, because you could take it as a negative. You say, oh, recession this, OPEC this. Listen, I got something very positive to say about this. This means gas prices are likely coming down over the next few months, which gas prices going down is ultimately a very important signal to the consumer of actually feeling somewhat decent. There's nothing the consumer hates worse than going to fill up their car or a truck or whatever it is, right? And they got to pay some astronomical price. Like, the consumer looks at that gas price, and if it says a much lower number, even though it doesn't add up to that much in the grand scheme, might be 20-cent difference a gallon, 40 cents, it doesn't add up to that, but it's just a psychological effect it has on individuals. When they go to that gas pump and they see it says, $2.50 instead of $3. Like, it's only 50 cents a gallon difference. Okay, you're going to gas up with 10 gallons. It's $5. What's the difference? It's a psychological nature, and it's just, I don't know, it's just something that's programmed into like the masses. And it's been like that, and I don't see it being, changing. And so at the end of the day, lower gas prices, it actually does have a positive, effect on the average masses out there when they see that gas price is lower than what it used to be, right? Now, the S&P 500 here today had the second biggest point drop ever here today. Second biggest. The only point drop ever bigger was on arguably the worst day in the history of the stock market. Listen, a lot of people say the day in 1987 was a worst day, but in modern times, that March 16th, 2020 is seen as the worst day for stock market investors of the past, 30, 40 years, right? And that day, I mean, the S&P 500 got absolutely destroyed and it was down around 12%. So anytime you're in that category, it was a rough day, right? It was a rough day. Looking at the retail trader investor type stocks here today. Now this is a stock list I put together back when all these stocks were kind of flying high, just to kind of track them all together and see like what happens with these stocks. Man, it's been brutal, right? Hood now down another 10% here today, down to $38. Hims, it seems like just yesterday Hims was $70+, does it not? Like just yesterday, I swear that stock was like 70 something dollars. It's down to 27 now, down another double-digit percentage here today, 10%. And you look and you're like, geez, like when do these stocks ever stop falling? AppLovin down another almost 10%. MicroTrageedy down another 9.6%. And Bitcoin's actually holding decent. Like respect to Bitcoin, like it's at 82. Given the environment we're in right now, I think this is the best I've ever seen Bitcoin hold. Now, obviously, it's down still a lot from the top when it was at 100,000 plus, right? 105,000 or whatever. But honestly, like I think this is actually pretty impressive. Bitcoin's holding and actually showing much more resilience than it has in past cycles. And I believe that's also because there's a lot more big money and institutional money in Bitcoin than we've ever seen. And obviously, a lot of that's coming in the last couple of years, right? Coinbase down another 6.6% here today. That was stocks down to $170. Shopify, oh my gosh, look at big tech today. Shopify got Shopified. 18% move for Shopify. It's a buy. MU, it's a buy. Like MU down 16% here today. Oh my gosh. Broadcom down 10%. Apple down 9+%. Snowflake down over 9%. Amazing's on down 9%. Unbelievable. I mean, what's crazy? I know we're getting to some attractive pricing when I can just look at stocks and be like, that's a buy, that's a buy, that's a buy, that's a buy. Because when I look at this, I'll actually say, like if somebody has any sort of longer term horizon, like 2 years or more, 5 of those 6 stocks are actually a buy today. The only stock of those 6 that I would say I would not be interested in is Snowflake. Now, Apple's also not super interesting to me, but at the end of the day, Apple's probably still a moneymaker over the next couple of years. And if you want to ask me which stock of those is the biggest buy of that bunch I'm showing you right there, the best risk-reward opportunity of all those stocks, in my personal opinion, if we're looking out the next few years here, is Amazon. Amazon is the best risk-reward profile of those stocks I'm showing you right there. I would say after that, I would go Shopify, and then after that, I would go MU. Now, Trade Desk. This is a stock. I'm still doing research on Trade Desk, by the way, trying to see if this is a stock I ever want to buy. Stock fell all the way to $49. This stock has just been getting hammered left and right, down another 12.8% here today. Stock is down a shocking 58% this year. We're in April, and it's already down 58%. Trade Desk, I mean, if you ever want to see a broken stock, that is a broken stock. Now, you also got some funny moves out there here today, right? Look at the Cheesecake Factory. I mean, the far majority of their restaurants are all operating in the United States of America on U.S. labor and U.S. produce and, food. And yet that stock got hammered 9+% here today. Like, that doesn't make sense. That's silly. But, listen, for a company like Cheesecake Factory, people say recession, maybe business pulls back at the Cheesecake Factory in North Italia or Flower Child, there are other concepts. That's always a fair argument, but the thing I'll say for Cheesecake Factory is interest rates matter a lot more for them because they have 2 banger concepts that they're going to be expanding all over the United States of America over the next 5-10 years. One's called North Italia, one's called Flower Child. So if we're talking about yields on debts going lower, they're going to essentially be in a position where they're going to be able to expand faster over the next 5-10 years and take out debt at very cheap rates. Additionally, if labor weakens at all over the next year or two, which we'll see if that even happens, but let's say it does happen, that's a lot more cheap labor for Cheesecake to add a lot more restaurants, to have a lot more labor at cheaper prices. So at the end of the day, like, that they're set no matter what, right? So this is just a silly move and a great buying opportunity for anybody in regards to that's interested in Cheesecake Factory stock here today, right? This shows you there's nowhere to hide on a day like today, because this is very important stock I'm showing you in front of you right there. Very important. Whirlpool fell to $86 now. The stock is down another 25% so far this year, down 5+% here today. And the reason that's so important is it shows you there's nowhere to hide in this market right now, right? Whirlpool's an American company that makes much of their let's call it appliances in the United States of America. And yet there's still that stock just gets hammered to new lows and new lows and new lows and new lows. And it just shows you there's nowhere to hide. I could understand if this was an appliance maker that was based in China or Korea or Mexico or wherever. But this is an American company that manufactures many of their appliances in the United States of America and sells to American consumers. Now, they do business over the globe, but they've gotten out of some of the international business in future years, so you just know where to hide. Even a stock like this is a perfect example of there's nowhere to hide. Adobe down almost 5% here today. They don't even make physical products. It's not like they got to make something in China and then they got to pay the tariff coming in. And it's like, oh my gosh, we got a 67% tariff we got to pay. Oh, we make this in Vietnam. We got a 85 billion % tariff we got to pay. No, this is Adobe. It's a software company, recurring revenue business model. And yet that stock can't get a break. Adobe's a buy here today. I was not a stock I bought. I'll share the buys I was making here today. But I was very tempted to start a position in Adobe here today because that's a steal deal. There's starting to become a lot of steal deals in this market that, anybody that's got a little bit of a longer time horizon is going to be like, thank you for buying that stock. Thank you. It's bad when you see something like this. Look at that. Gold was even red today. Silver went down almost 8% today. Silver? You can understand gold and silver are seen as like safe havens, right? Gold's obviously the ultimate safe haven, and then after that, silver. And so to see gold and silver red on a day like this shows you that really it was one of those type of days when people said, I just want out of everything. Which then you go to the dollar. But then there's also fears about inflation, so does it make sense to go to the dollar? And there's also fears about going away from the dollar as a reserve currency. So does that make sense? Right? Like you kind of start running through this and you're like, hey, I don't know if that makes the most sense, to be quite honest, right? But yeah, that's when you know it's bad, when even gold is down, silver's down. Now, 10-year treasury. This is extremely important for everybody watching this video right now. Listen, it looks like the 10-year treasury is going to head into the threes. I could tell you if we see any more weakness in this market, if we see more ramped up recession fears, we're headed to the threes in regards to that 10-year treasury. Now, I've been doing some tests on Google recently because you got to understand the 10-year treasury matters significantly for two things specifically. Okay, so I've been testing out Google's AI product recently, and I'm like, I'm going to ask Google AI, whatever, why does a 10-year treasury matter? Because I want to see if it brought up the two things. And here's the results. Look at this. It actually called it. It called it. So Google's AI is doing good. I've been testing it lately, the last couple of weeks. Hey, I know Google stock gets a lot of hate, but I'm telling you, Google stock actually right now is a buy. It's not a stock I personally own. Google stock right now is a buy. I've been testing their AI products, and I'm actually very impressed because they mentioned the two things that are, why the 10-year matters so much. It's arguably the treasury that's talked about the most in the stock market because it affects things like mortgages in a substantial way. And whatever mortgage rate, the 10-year matters more to mortgage rates actually than the Fed funds rate, believe it or not. Additionally, corporate debt. And what do a lot of corporations have? Debt. Like almost every corporation out there has some level of debt. Some have hundreds of millions of dollars debt, some have billions, some have tens of billions of dollars of corporate debt, right? And so a lot of times they go ahead, roll that debt over, refinance it, things like that, right? And so at the end of the day, the 10-year, we got to get this 10-year down, given that we got a lot of corporate debt that needs to be refinanced. We got also a lot of government debt. Whew, that's a whole situation. So this 10-year, Trump in the administration, I think, really wants to keep getting this 10-year down. I'll be honest with you guys. I think they want to get it down a lot more. I think they wouldn't mind getting that 10-year, under 3.5%. I think they wouldn't mind getting it into the twos. Now, can they get it into the twos? I think the only way they could get in the 2s is if we actually have a for sure legit recession. If we have a for sure legit recession, then you could talk 2s or maybe even in the 1s. But outside of that, you can't really get it down there. But even on a bunch of fear, you could easily get this into the 3s and like to a 3.5% type number, okay?